For those of you that are joining one of our Blockchain Mondays for the first time, warm welcome. Good to see so many interested in our subject today. My name is Moritz Schilp. I'm one of the founders and board members of Hanseatic Blockchain Institute. We are an association located here in Hamburg. We have been founded last year in 2019 in January by a group of blockchain enthusiasts, and we have two main targets. First of all, our association wants to provide and to enhance the networking within the Hamburg-based blockchain community. And then we want to educate, we want to share ideas. And since we started in January 2019, we really did a weekly event called Blockchain Monday, initially as physical events, having people from the Hamburg area presenting startups, presenting ideas. But we even have lawyers to discuss the legal issues of data protection on the blockchain, for example. We had tax experts. And since COVID, we moved this format into a virtual event, which gives us the advantage that we can have hosts from all over the world. And we actually had people speaking at one of our BloMos from London already. We had someone from Tel Aviv. We had a girl from Moscow. So we are getting more international, which is quite nice. And that is essentially the introduction. For the time being, our website is mostly in German. However, if you like what we do, please let us know. If you have ideas or would like to speak in our group, please let us know. We are always open. If you want to contribute or if you want to become a member of our association, that's a good thing about a German Verein, that you can become a member. And you can get our newsletter as well. And you get weekly mails on what we are doing on the next Blockchain Monday. And we all hope that soon COVID will be over and we will be able to do physical events again, because a significant part of this is the networking and the communication between the members and our guests. And this is not really working that well. That's the kind of a short intro. Everybody initially, when we talked about Bitcoin, was something, Alex mentioned that initially was something that was used in the darknet, and that was the easiest thing to pay illegal activities. Is something we have been made aware of. And for me, it is quite interesting to see and learn how Bitcoin is more and more getting into the kind of out of the gray area, more and more financial institutions adapting Bitcoin and trying to do even the AML, that's the anti-money laundering compliance. So they try to figure out, how can I get clean Bitcoin? How can I make sure that someone who is sending me a significant amount of Bitcoin, that these come from a trusted source, and that's something, the compliance issue, that's more and more developing. And we are very happy that we have Alex here on the call today. Alex is working for a company called Global Ledger in the Ukraine and in Istanbul. You're working, if I get it correct, Lex?
Yep. So we have representatives in Estonia, and partners in Israel as well. Yeah.
Okay, cool. And he is particularly working in Bitcoin tracing, in checking what's happening on the blockchain. And I think it's a very interesting topic because blockchain stands for transparency on the one hand side. On the other hand side, people think about anonymity. This is one of the tricky English words one needs to get used to. Yeah, we are keen to learn from you, Alex, how you work, what you do, what the blockchain tells us or tells you, if you know how to work with that, about people, about transactions, and so on. But maybe before we start stepping into it, maybe you can give us a brief introduction on how you got into the blockchain issue and community, and what essentially led you to getting into this particular space. So how comes that you decided to found your company that's offering Bitcoin tracing services to banks, to financial institutions, and of course to law enforcement as well?
Yeah, so basically, as I told you, I was first introduced to blockchain back in 2011. It was some kind of ad that, you might have money that is not relying on some kind of central bank, and it was cartoon, really. It was cartoon, and it was like inviting you to become a miner. So back in that day, mining was literally, you didn't even have that kind of, pooled mining that we have right now. So you can mine on your own machine and get the whole reward, like 50 BTC from a block. But I was calculating mining proceeds at that time. I was like, oh no, like I can burn my video card, and Bitcoin was like less than $1 maybe at that time. I was fluctuating all the time, so I was like, no, that's pretty risky, So I didn't become an early miner really, but I knew about Bitcoin, so I've been trying to understand this. I've somehow Bitcoin news been been around. In 2015, I actually started receiving part of the salary in Bitcoin for one of the projects I've been working at that time.
Right.
So at that time, Bitcoin was cheap as well. So it was like $100, $200, and it was crazy when how it was fluctuating at that time. Then later on, I got interested in that. When I've been holding money in Bitcoin at that time, I was really interested if this thing is hackable, really. So can you hack a Bitcoin? Can someone hack me, if he knows my wallet? And I even tried to hack it.
Okay.
So yeah. So I'm partly a developer as well. So I tried to hack my own wallet. So I wrote a program that actually does what it should do. Literally trying different private keys to see if, brute forcing, just trying different passwords whenever, he can find my wallet there. Actually, I put my PC with a really strong video card at that time. He was trying 17 million passwords per second. So that's a lot. It's like a trillion in a week, or maybe less, like that. And I realized that nothing happened in a couple of weeks even. So the computer became really hot, but nothing really changed in my room, and my wall is still not hacked. So I wrote another part of the program that would say, how much time I need to actually hack something. And when it said me, like 140 million years, I was thinking, okay, that's an interesting thing. So I should learn more about that, and maybe you can take a job at that thing and stuff like that. So I have finance education, so I got into one financial project in 2000, at the end of 2017. So at that time we realized that we need to perform due diligence. So we need to perform due diligence. We need to understand where our money coming from, what kind of coins we're storing at our cold storage. This kind of compliance thing popped up. First guidelines from FATF. So with a couple friends, that are really passionate about Bitcoin and data analysis, data science. We founded a company named Global Ledger, and now we're working with law enforcement, financial institutions, crypto projects to provide them with digital assets tracking, AML compliance tools, and things like that.
Cool, perfect. I think you wanted to, I don't know, have you have a presentation, or maybe you just
Sure.
share your screen to give us some ideas.
Yep.
Please, everybody, if you have questions, please use the Q&A function of this Zoom webinar. In German, there's F and A, and then English it's Q&A, and please feel free to just pose questions, and we'll try to address them as they arise.
So let me share my screen. Can you see my screen now?
Yeah.
Super, fantastic. Yeah, so yeah, as I told you, what we do for living is providing blockchain analysis. We have our own set of tools, our own research department. So, people are really working to understand who is who inside a blockchain and where money going. So I'd like to basically start with a really simple concept. Maybe some of you, heard really complicated explanations on what blockchain is. Usually when we hearing about blockchain, we've seen some pictures like that when you have lots of blocks and chains connecting them, and you don't really know what's going on there. So I will try to give you a really simple explanation, just to, that would keep everything simple afterwards. So, so blockchain in general is just a ledger. So it's just an accounting book where you see transactions that, Alice sent 1 BTC to Bob. I'm simplifying things here, so it may not be Alice, it can be some, usually it's some kind of random letters and numbers. As we know, wallets are random letters and numbers, not really random, but looks like random. But it's still, it's the same thing. So it's, someone sent Bob 1 BTC, someone sent, Max sent 10 BTC to George. George then sent 1.5 BTC to Alice, and so on and so on. And one block is basically just one page at that ledger, at that accounting book, right? So it's just one page, and every 10 minutes we just have new page inside a blockchain, inside this.
Sorry, Alex, Alex, you have on the left-hand side another window open, which is on top of, and we see it as a gray shaded area. That one that you're moving, if you can.
Oh, that's, yeah. Let me. It's a Zoom. It's a basically Zoom. It's a part of the Zoom.
Yeah.
Okay.
That's
super.
Okay,
yeah,
now it's.
Thank you for
Yeah.
Yeah. So basically, what's cool about blockchain, and particularly about Bitcoin blockchain, is that all transactions are connected. Because let's say if you take in your cash, if you have your banknote, right? So when banknote came to you, you may know that, it was your salary, and, so, the source of this funds are your salary. You may send it to someone, may give it in supermarket, and you don't really know what's happened. So, really short part of that history, only, your company that paid you salary. And on the other hand, that you gave that to supermarket. In Bitcoin blockchain, everything. So the history of that particular coin from its genesis to what is going on right now. So where it is right now, what kind of wallet holds that coin. So in this case, I've shown you that, between pages, there are connections basically inside the blockchain. So let's say Alice sent 1 BTC to Bob, but, where did Alice get that money? So Alex sent Alice that money. And, before we can understand, okay, so where did Alex get that money? So maybe some other guy sent it to Alex, and maybe, that guy was a miner, so he created those coins. So all transactions are connected. So Bitcoin is highly traceable. So just because inside the blockchain, inside every page and every transactions, there is that kind of field that say previous transaction, so previous source. That's basically created for security, because that doesn't allow people to spend money twice. But it actually works for traceability, amazingly works for traceability. So compared to cash, as I said, really short history there. But in terms of Bitcoin, endless possibilities of tracing. You really know the whole history. And if we compare that to cash, that would be like Bitcoin is like having a GPS beacon in every banknote. So you don't really know who owns that, because you just know coordinates, some random numbers string. But you kind of know where it's moving. at some point, when you see this kind of cash note go into a supermarket, so someone spent that in supermarket. So if you know coordinates of the supermarket, you kind of know that someone is trying to send money to the supermarket. That's easy. I mean, the same way it works for Bitcoin. It's just like having a GPS in every coin. You know where it is inside the blockchain. So who owns that? And in general, what kind of data blockchain tell about you if you're holding coins, sending transactions. So, it's super easy to get information. How did you get those coins? So whenever you get it from some kind of exchange or from dark web trading, or you got donations, where do you buy stuff? So, if you paying with BitPay, or you visiting some kind of sites that are accepting crypto. Do you invest in something? So maybe your exchange accounts, maybe you're using some kind of smart contracts. The smart contract's not really about Bitcoin, but for other blockchains, particularly Ethereum. What other wallets do you have? So by one wallet, by forming a little bit of tricky partner analytics, we can define whenever you have other wallets as well. And where do you store your wealth? Where do you try to hide it, basically? So maybe you're trying to make hundreds of transactions, really long trades, but we can still trace that till the end. With some additional research, and with some maybe mistakes from your site, lots of information can be revealed. With cooperation with entities inside the blockchain, with exchanges, with banks, with funds, with payment providers, marketplaces, lots of information can be revealed. IP addresses, email addresses, your phone, if you use that for 2FA, for example, your passport, if you passed KYC, or your customer check, your devices that you used to perform transactions, and even more. Sometimes, you have videos, you have to prove your identity. So your video or your photo may be revealed by blockchain investigation. At the right side, you can basically see, the type of report we're providing every exchange for every transaction it gets. So we say immediately, okay, so it's 10% of risky coins, and they're coming from dark web. Or maybe there are, all coins are okay, they're coming from good exchange with good KYC AML procedures. Bitcoin anonymity was a buzz from the start of Bitcoin. Even right now, everyone is talking about Bitcoin as kind of anonymous currency. But let me explain you how it should work. Probably how it was discussed at early Bitcoin talk forum, or early communities of Bitcoin. So there was a set of rules. So if you keep in them, you stay anonymous, and your counterparties would stay anonymous as well. So you're not reusing addresses. So you're doing just one address for one transaction. That's something that even Satoshi Nakamoto told to everyone. The mining should be decentralized. So everyone is mining on their own. So in our own garage or flat. So you can create new coins, so anyone can create new coins. Bitcoin was considered as a payment method. So you actually paying for stuff, you don't need to go cash, because if you need to go cash, if that's a big amount, you definitely need to do KYC check right now. There should not be central authorities. So Bitcoin was invented to kind of remove middlemen. So, banks that charging you commissions was considered really bad. And you should use non-custodial wallet software, which means you don't need to trust anyone. So no one is holding your coins. No one is holding your private key. You're doing everything. You are your own bank. That's the famous phrase among Bitcoin users. So be your own bank. So that means you're using a wallet, but you actually holding your private key. You are responsible for your security. However, now most people using custodial wallets when they sending money to some kind of exchange and holding, keeping that there. In this case, if you keep all the rules, you have really few anonymity risks. So your counterparty may publicly say, or maybe not publicly say, that they know this will belong to you because you made peer-to-peer transactions, let's say. Yeah, and these counterparties can have publicly known wallets, and they kind of can share your identity or some kind of a details. But that didn't go as planned. All these rules were actually not kept from the start of Bitcoin. So this is a graph of the very first Bitcoin transaction. So it starts from here. I don't know if you see my mouse, should be seen. So where Satoshi Nakamoto is, right? So it starts from here, and that was very first transaction from Satoshi Nakamoto to Hal Finney. And immediately it didn't go anonymous because Hal Finney wrote a post on Bitcoin Talk saying, "Hey, I received transaction from Satoshi Nakamoto, and here is it." So he posted the transaction ID. So immediately he de-anonymized, his wallet and the Satoshi Nakamoto wallet. And after a bit of analytics here, we
sorry to interrupt you, but how do we know that the initial wallet is Satoshi Nakamoto because of this transaction?
Yeah. Because everyone knew that Hal Finney was, one of the earliest adopters of Bitcoin, of being, working closely with Satoshi. So he said, "I received coins from Satoshi." Actually, I will. The next slide is about Satoshi as well, so there will be additional proof there. So what I mean is that after even really short investigation here, so we can see, let's say, Bitcoin Talk user with the nickname CGT. So and with more investigation on that wallet, you can understand that this wallet belongs to organization named Electronic Frontier Foundation. So you can even associate this user with that organization because that listed as a donation address on their main site from even days of really early Bitcoin adoption. So from day one, from the very first transactions, lots of wallets were de-anonymized, and it didn't go well at all in terms of anonymity because people are starting building trust for their wallets. Let's say if you are OTC trader, you would like to show that you performed lots of transactions, so you're not if you don't want to send all the wallets that you used, right? So if you don't want to send like hundreds of wallets to show that you had hundreds of transactions, you're showing just one wallet with 100 transactions, right? So people started reusing, they start building reputation for their wallets. There was even a phenomena that called vanity mining, when people are trying lots of different private keys to get a wallet with their name in it or something like that. So people were posting their addresses as for donations. They were posting that on Twitter. They were using they were using special cryptographic proofs to confirm they have the address. They've been using transaction proof to confirm they own this address, to build their reputation that they have lots of Bitcoins, for example, or they can perform this OTC deal, and so on, so on. So people were starting de-anonymizing themselves, basically. Not only transaction graph is a way to de-anonymize people in Bitcoin. There are that's one of the examples when more complicated techniques of code analysis were used. So I understand this picture is not really telling you anything. So I'll try to explain to you in really simple terms. So you can see two video cards here. In early Bitcoin mining days, people were mining with graphic cards. And when you actually mining, you kind of guessing. So remember I told you about pages. So blocks are pages. So the one who guessed the stamp, the proper stamp on that page. So that's the block hash. So the one miner who gets the proper stamp on that page gets the reward of 50 BTC at that time. And to actually guess that thing, you have to guess random numbers. You have to guess random hashes with, put in random numbers inside of it. So, and your algorithm may be different. You may be counting like 1, 2, 3, or you may be counting like 3, 6, 9, 7, or just random numbers at all. So basically, researchers found that, and we particularly replicated that research with additional details, that Satoshi was mining with slightly different pattern. So probably he was using slightly different software or hardware for that. So he's, you can see gray dots here on the graph. They represent like other miners, and these blue dots. I mean, that's huge amount of dots. I mean, they may seem to be lines, but these are dots. They represent Satoshi mining pattern. So he would be restarting all the time at almost the same number, and the sequence was the same. So Satoshi sequences are pretty much, I mean, they're really different from what kind of sequences other mining software being producing, or software or hardware. So there are more complicated things to prove, that's a Satoshi, for example, because who mined the very first blocks? Yeah, that was one guy just who mined like this transaction that been sent to half finished. So you can verify whenever this kind of mining pattern, prove the public part, the public proof, right? Public information. So how it really works, how really anonymous Bitcoin users are. So address reuse is common. So people reusing their addresses, and when you have an account at exchange, you usually have one wallet for deposits. When you have your own wallet and address, people tend to use that more than one time. Uh, Mining is done through pools, so no one really mining, solo anymore. So you have to connect to pools to get that kind of, constant rewards. So you're not getting like 12 BTC, but once a year, but you're getting like 0.1 BTC per day or something like that. If you invest in a Bitcoin, if you buy in large amounts, you have to pass KYC AML checks. When you're even registering at exchanges or some kind of services, you actually, put in your email address, you're visiting that with your device, so you live in lots of information out there. As I told you before, there was like, it should be lots of decentralized services and kind of trustless economy without middlemen, but we see lots of centralized services. Even banks are now going crypto, lots of fintech projects out there. Even projects like Robinhood or this kind of trading services, they are all centralized. So people are kind of used to trust to someone big. People didn't like the fact that if you lost your private key, you lost access to your Bitcoin. So for them, it's kind of easy to have that 2FA thing or insurance, or some kind of backup plans where you can restore your coins as you're restoring access to your Instagram account. Compared to the situation when you lost your private key, when you sold your PC and forgot your wallet was there, so you're really losing your coins. So they switched from this kind of decentralization, a trustless idea, to centralized services with maybe like with insurance. So, and yeah, users holding their coins at custodial services, they are not there is still the kind of culture when you have to use decentralized services. Let's say DeFi, decentralized finance, right now is on the rise, and there are lots of people that became users of that. But still, lots of coins are held at custodial services. Custodians like Coinbase Custody, Xapo before, BitGo, lots of wallets where you actually, not owning your private key. So they controlling your money. They can ask you questions about it. They can block your withdrawal and so on. And in this situation, the anonymity is a question, because to stay anonymous, you have to use really advanced techniques. Probably these kind of part of these techniques rely on your anonymity in internet in general, but plus you have to keep that kind of anonymity rules, and your counterparties should keep that kind of anonymity rules for you to be able to stay anonymous.
There was one question about
Yep.
the abbreviations. So KYC stands for Know Your Customer. So that's
Yep.
retrieving information on the person you're trading or dealing with. And AML is anti-money laundering. In German, Geldwäschebekämpfung. These are the kind of typical abbreviations. There's one other question, just briefly. So you are focusing on Bitcoin. The question is there a back traceability, a specific Bitcoin feature, or is this a generic feature of all blockchains, including Hyperledger or R3 or Corda or whatsoever?
No, basically there are lots of blockchains where transactions are not connected this way, but there are ways, like not for Monero, for example. So Monero tracing is a very hard thing. It was created to be untraceable and super private, but for example, for all other, I would say, Bitcoin based blockchains like Litecoin maybe, or even Dash, if you're not talking about the private anonymous transactions out there. Yeah, there is a back traceability for blockchains like this recent Mimblewimble protocol. Yeah, it's slightly different. For Ethereum, even it's slightly different. There is now this kind of previous TX, previous transaction field for Ethereum. But you still can see it's still the same ledger. So you still can see that Alice transferred one BTC to Bob and Bob transferred one BTC to someone else. But in terms of Ethereum, it's kind of tricky because it's more like your bank account, because in your bank account, when you received money from your company, let's say you had $1,000 savings, and then you received $1,000 salary, and then you're spending $1,000 on a new iPhone. So which $1,000 did you spend? You don't really know. So you may think about it. You may say, okay, I spent a salary, or you may define that, right? But there is no direct connection that last in, first out, or first in, last out, or whatever. So the same way lots of blockchains work. So they don't have this kind of direct connections between transactions. So you have to calculate. You can choose any methodology. There are different methodologies to use, like I said, like last in, first out, or something like that. Yeah, but all the Bitcoin based coins like Litecoin, yeah, they have that kind of back traceability. So did I answer it?
Yeah, perfect. Thank you.
So,
there's one other question, just asking: are all users of Bitcoin able to discover the history of their coins? And yes, if you know how, then you can do it by yourself to some extent. I think you give a quick demonstration later on.
Yeah, we can even jump to this kind of quick demonstration.
Yeah.
But I mean, generally, yes. So even with a simple blockchain explorer, you can basically see all the transactions, even with the Bitcoin node, even with Bitcoin Core wallet, the most basic, wallet that you can get. Probably not the best, not the most basic, but the first, the main, wallet. You can actually see all the blockchain transactions and see what was the previous transaction and the previous transaction for that, and so on, so on. Yeah. So this kind of wallet tags, which says, this wallet belonged to that user, is a matter of additional research. So that's what we're doing. That's basically what this slide is about.
Yeah.
So for example, that's what we know about blockchain right now, right? So we have more than 1,100 entities identified inside the Bitcoin blockchain. That particularly means around 125 million addresses with a tag. So it can be like 20 million addresses of Coinbase, let's say. So, user deposit addresses controlled by Coinbase. their hot wallet, their cold wallet, their custody wallets and things like that. So, and yeah, these tags are pretty much, I mean, they're all different. So there are gaming projects, ICOs, terrorist financing. Yep, even Hamas, they sometimes posting their address at Twitter for donations. Um, Odyssey, payment providers, lending exchanges, sanction lists, cyber crimes, hacks, and so on, so on. So there are huge list of entities and their wallets. So basically, just to give you the whole picture, so there from the start of Bitcoin, approximately 600 million wallets were created, and we know like 125 mil. So we know like 20% of all the addresses inside the blockchain. So these addresses belong to some entities or users that we know that had public proof or algorithmic proof um, of the tag we assigned to that. Oh, sorry.
That's impressive, yeah.
Yeah. So, and what's more interesting is that regulations, I wanted to say are coming because I said like that, 3 years ago, but now they came. There are lots of, you know, local regulations, but they all are coming from FATF guidelines. They're trying to help financial institutions um, to to create proper regulations, to understand virtual assets, how to regulate, how to identify entities, how to perform surveillance, how to perform law enforcement, and what's the proper AML CDF process, and so on. Bless you. Yeah. So what generally, so VSAP, that's an abbreviation for virtual asset service provider. So that can be some kind of payment service or exchange, Odyssey, maybe even gambling site. So what they should do, and most of legitimate entities that are licensed, they are doing that. So they depositing, so they check in the deposits, all the deposits that are coming, they're receiving reports like I showed you before. So there is automated KYT check. KYT stands for know your transaction. So just because some of the transactions, they have that kind of threshold. So some of the transactions, they don't require KYC check. So you don't need to send your passport to make really small transactions. So exchanges are doing KYT checks. So they check in whenever this small transaction isn't coming from a suspicious source. If something bad has happened there, if something bad was identified, exchange is getting alert for their compliance department, and the wallet address at this particular exchange, the account can be blocked. If that's a low risk, you get an approve, you can use this exchange service. If your wallet triggered an alert, they perform manual investigation. So they are checking whenever this source is real. They may ask you questions about where you get a Bitcoin. In most cases, bad actors, they just disappear in that period of time. So they're asking you for proof of funds. Maybe you can provide a receipt, that you bought that from some kind of Bitcoin ATM. So in this case, you can get your money unlocked, or the virtual asset service provider may fill up suspicious activity report for their local regulator. And these local regulator will share that to your local regulator, let's say. So let's say if I'm using German exchange and I get an alert and I didn't prove my source of funds, the exchange should actually send that to the German local regulator. German local regulator, BaFin, will send that to Ukrainian financial regulator, and I'll get questions here. So there are still people, as I said, that are playing hide and seek inside blockchain. There are various methods for that. I'll go through through basics there, just to give a brief introduction on the remaining anonymity inside the blockchain. Um, Unfortunately, these methods are used for money laundering, so I had to put this kind of disclaimer. So this is for educational purposes only. I'm not trying to teach you money laundering. And in most cases, if you use those methods, your money will be blocked at exchanges, and unlocking them will be hard. So where's the difference between privacy and money laundering? That's really important. So if that's your money, so you purchase that with a credit card, or you mined it, or something like that, you legitimately owning them. Um, that's okay. You can use these methods, and it's just keeping privacy. So you don't want no one knows what kind of things you're buying. Maybe you visit in some sex shop, or whatever. But if that's not like that, if that's not your money really, so that's money laundering. Oh, that if that's money that you even haven't paid taxes, so that can be considered as money laundering as well. Yeah, so generally, what usually we see when we analyzing hacks or money laundering cases. So bad actors, they are splitting coins into very small transactions, into very small amounts. Then they trying to mix it. There are various ways to mix coins. They may use methods that I will tell you afterwards. And then they will get it like as legal cash. They try to withdraw it from a trusted source. Let's say if they deposited that to exchange, and they try to immediately withdraw it to deposit to another exchange, and the second exchange may consider it as okay money. Or they trying to get cash, try to send that to some kind of OTC, maybe perform some peer-to-peer transaction with a discount or some kind of like that. What we're doing at all these stages. So when someone is splitting coins, that's already really suspicious part, and it's super easy to spot that inside the blockchain. So for every exchange we're working with, uh, that's the first trigger when we have an alert. So they may have really small lock in terms of time. Yeah, but they get an alert that someone splitted coins a lot before depositing those coins to your exchange. When people are trying to mix coins, depends on methods they use. We're using a proper demixing methods. In most cases, these kind of mixing things, they are demixable. And yeah, so we can perform continuous tracking. Even with cash, with the police support, you can continue tracking money on bank account, or even ATM. You can ask questions to OTC that exchange those money. So it was the case that OTC had cameras in his office, and he shared those kind of cameras, this video from the cameras for the investigation. So the first method that's probably the most usable method. With that method, you would probably get immediately blocked at any of legitimate entity that is operating Bitcoin. So this is really simple demonstration of this. You can see that at that site, Alice and Bob combined their coins into one transaction. Usually it looks like, if you're combining coins into one transaction, that looks like a one person sending those money. So if we check the next slide, so it looks like one person combined, just because it's one transaction. When you paying for something, right? So you don't have someone else's money in your transaction, like let's say if you're using bank or your cash. Usually you're doing that alone, right? And in Bitcoin blockchain, that's the same. Without a special conspiracy, I don't know, you cannot really get into someone's transaction. So the second person or the server, like 70 people should agree that they are Coinjoint their transaction to be more private, I would say. So what does it mean? So you kind of pull in those transactions together, you pull in those coins together, and you may have even more outputs. So basically, here, these first four 0.5 BTC, they can belong to Alice, and the rest can belong to Bob, or this can be these three belong to Bob and these four belong to Alice. So the combinations can be really different. Modern Coinjoint transactions, they may have like 50 to 70 people participating at the same time. And to crack them, it's super easy. You play in Sudoku. You basically play in Sudoku with lots of computing power to understand how then people spending these money, or how then they unite in them in different Coinjoint transactions. So Sudoku is the best way to crack Coinjoint. The next thing is people are using micro exchanges or blockchain swapping. So basically, there was a really big case related to Shapeshift. That was an exchange that allowed you to perform really small Bitcoin atomic swap transaction. Atomic swap means you can really quickly exchange Bitcoin to Ethereum, for example, without even registration at this particular site. So they provided you with one-time deposit address. You send the money, and immediately you get an Ethereum back on your Ethereum address that you provided to them. So this kind of thing is super interesting because it's widely used even now. People are splitting coins into amounts like 0.1 BTC and sending them to different exchanges that performing atomic swap and trying to do blockchain swapping. The problem for the hackers that they don't know that these micro exchanges sharing this information. So they sharing this information about that someone swapped Bitcoin to Ethereum. Even if you're not using this kind of micro exchanges, but you're using big exchanges, but with really small amounts, still they share. There is an additional travel rule introduced by FATF, where exchanges may be sharing user data between each other. So with that, you can catch that with continuous tracing. So okay, so if it's switched to Ethereum, you can still trace Ethereum transaction, and it's okay. Mixers and tumblers, that's actually an actual image of a mixer that being used during the Binance hack in 2018, I believe. Yeah, so these are super simple. They also splitting coins into very small pieces, and then they perform in like lots and lots of transactions. As you can see, all the dots, they are wallets, and all the lines, they are transactions. So one wallet may perform like 100 transactions, sending money to hundreds of different wallets. So they kind of mixing them together all around, and they're just trying to make really long trades. And just because they always splitting coins, they mixing that with maybe some kind of mined legitimate coins. At the end of the day, you're getting coins that are either all risky or a really small portion of money that are coming to exchange are risky. So it depends on the methodology you're using to evaluate risks. The bad news for people that are using this kind of method is that by the latest regulations in most countries, if this kind of pattern is identified, that particularly means huge AML risk. So you will get immediately blocked as well if your money are coming from the source that have this kind of transactions pattern.
There are two questions which are not directly related to it, but maybe we just try to address them briefly. The first is there an application which helps to analyze bigger transactions of whales or even tell the owners?
So there are not publicly available applications like that. So for most of them, you need to pay, around like $2,000 or $1,000 per month. So we have really simple Telegram bot. You can just Google GL bot that will tell you the sources of funds. That was created for our friends, Odyssey traders that didn't want to receive dirty coins, so they can check every counterparty. It's super cheap. I know it's like less than $1 per check right now. So you kind of, paying as you go. I didn't want to advertise. That was just an answer to the question, right?
Okay,
So
but I think that's interesting. Maybe you just share the link or demonstrate it once.
yep,
Um,
yeah.
that's cool. Someone just asking what was the term for the method that is used for cracking Coinjoint transactions?
Sorry, can you repeat, please?
Which term did you use for the method to crack or to unmix Coinjoint transactions?
Which term?
Yeah,
So
I
what
think
kind of
it's a
how long it is?
no probabilistic method, right? Or
Yeah, it's basically a probabilistic method.
yeah,
You know, depends on the privacy settings in this kind of coin join software people used. It's either high or low probability. Depends on the patents, depends on the, you know, how professional this kind of money launderer is, how good he is at understanding this kind of technology. It can be hard or super easy to understand where money went. So yeah.
okay.
Don't want to answer with lots of details because it's still really tricky thing. Yeah. So another thing here is decentralized services. So decentralized services like decentralized exchanges. What means decentralized? That they don't have central authority that you can apply, you know, a support ticket, let's say, and ask them to return your money. So these things works without human or with really with an algorithm that, you know, proven to be neutral. So if you perform that kind of transaction, you cannot reverse, you cannot block his money, and for example, you cannot seize money from some kind of user's account, or maybe users will be trading from their own account, so user will be still controlling their money, even, you know, performing really high speed exchange operations. So it's really interesting because a couple years ago there was a wave that started, you know, from lots of regulators, particularly in the US, that have been accusing lots of decentralized services founders in, you know, money laundering support. So lots of exchanges, even like IDEX was one of the biggest and oldest decentralized exchange on the Ethereum blockchain, is now performing KYC checks. Even though it's is decentralized, you're really controlling your own money. There is no technical possibility for them to kind of get your money, to, you know, to steal it or block or things like that, but they still perform in KYC checks to allow you to trade on their exchanges. So you can even register, you can even deposit money, but you will not be able to trade without this kind of check. And with this check, you know, that's almost like a normal KYC ML procedure at centralized exchanges. Yep. So I saw there was a couple more questions there, or is that right? So I saw a
Yeah,
couple
please.
notifications coming. Let me
So there's one question which is a little bit more philosophical, but maybe just interesting because of that. When you open the windows, we all see this on your shared screen as a gray area. This is a little mistake within. So maybe I just pose the questions. We have two shorter questions. So
Okay.
one about samurai transactions. Is it correct that they cannot be dealt with because of the high degree of entropy?
So Samurai Wallet is kind of tricky because there are even security issues. So I wouldn't suggest you to use that. There was a conversation, really famous conversation between the Samurai Wallet's founder and one of the users that, you know, kind of tried to investigate security issues, and the founder's answers was not really uh, transparent, I would say. So, but there are wallets like Samurai, right, all based on the same code, or you know, they're trying to provide this kind of coin join with high privacy level. The problem with that is that you will instantly get blocked. You can, you know, um, even if you know will be getting blocked, you will still be a high risk client for the exchange. So depends on their own policy or their own relations to their own, you know, regulators or banks or some kind of partners. you are at risk. So keeping privacy with wallets like Samurai, they have super easy pattern to spot with these Coinjoint transactions, BC1 wallets, really small commissions, and coordinator addresses that are publicly known. Well, lots of ways people can identify it's a transaction from Samurai wallet, and there are lots of ways where people can still connect, your in and out into this Coinjoint mess. So this huge Sudoku play. So your transaction may be perfect. You was this super dude. You did everything right, and you did everything for the 100% privacy, but all your neighbors were not, and this way you can still be identified. So that's the problem with these wallets like Samurai. You have to think that you are not making transactions, Coinjoint transactions together with FBI that are trying to support this kind of network. And they do have lots of inputs and outputs, so they can take them out. And I don't know. Maybe we doing this kind of thing. Maybe we doing lots of Coinjoint transactions as well to identify some kind of actors out there. So these things are still traceable, and if you have clean Bitcoin, that way you can kind of make your Bitcoin dirty.
Okay, got it. There's one other kind of technical questions from an anonymous participant. What do you think about XMR atomic swaps to the Bitcoin base layer? Would that add massive amount of privacy and utility?
Yeah, so for XMR, there are two solutions that, one of them is started the development. One of them is already working. And so XMR is, the technology of XMR is great. Really, it's super great, but still it's super cool that you cannot even see the balance of the other user. You cannot see, the number of his transactions because of this, how to say, shadow transactions or shadow wallets. I forget the proper word for that. So you can provide a one wallet to the user to pay, but literally transaction will tell you it was another wallet. So that's super cool if you want to keep privacy. But Monero as well is out of the compliance rules for lots of jurisdictions like Korea, Japan, and I think that kind of trend may continue because one of my friends was actually doing really large transactions in Monero in Switzerland with, definitely with KYC checks and stuff like that. But for now, regulations became, tight, so he cannot do these big amounts, or he may even, just stop doing this kind of Monero Odyssey. So regulators are asking questions about Monero. Regulators know about all these methods that I told you, and particularly about Monero, Dash, these Mimble, Wimble. The funny thing was, was one coin, I forgot the name, but lots of team members there from Ukraine as well. So they did a coin on Mimble Wimble protocol, which is almost the same as Monero in terms of privacy features. So it doesn't have even connections between wallets when you're making transactions. So you can't really say that Alice sent one coin to Bob. But what they asked, we had conversation about potential algorithm for kind of a compromise between these kind of privacy and the security and AML analytics. So, it's like with, with WhatsApp, right? So you kind of don't need to think about all these private keys, public keys, and things like that. No one can listen to your messages when you're sitting in public Wi-Fi, so no one can intercept that as it was before. Actually, people can intercept your messages, your web traffic. But police, if they want, they can ask, Messenger or Facebook or WhatsApp to share your message if they do have investigation. So I don't know about Monero, but lots of privacy coins, they seeking for ways to comply with regulations, because this way they can get this kind of volume, they can get higher price for their token, higher value for miners, more miners, bigger community, happier people in this community, and things like that.
Right. You have further slides, or should we go to a few other discussion, or maybe you just finish what you brought, and then we can look into
So
it.
I basically have just a couple slides.
Yeah.
So the first one is just a short FIQ, in what to do in certain situations, just the practical part maybe. So you can still be blocked if you deposited coins to some kind of custody or centralized entity for AML reasons. Because someone may submitted your wallet as an alert to them, because someone may think that maybe you may have deposited money to Binance, and someone said that the Binance exchange is bad, so your next exchange that you withdrawing money and sending after that may got you blocked. So your exchange may be hacked, and other exchanges may be blocking all the deposits with this kind of source. So if you got blocked, and that's your money, so you're sure you got this money and they're legitimate, and everything is okay. So don't worry. If you explain your proof of funds, you provide proof of sources, it's gonna be okay. So, but don't tell stories. Don't tell, I'm a miner. If you just withdraw money from some other exchange, or maybe even gambling site. So sometimes you can get blocked after gambling site, because lots of them consider it very, really risky in terms of AML. um, don't tell those kind of stories, because lots of people trying to say I just sold a house, or whatever, and that didn't work. So and you don't have to do that, you don't need to do that, and don't do that. um, how to avoid AML risks? So you can ask your counterparties to send your money from a legitimate entity. Let's say you can say, can you send me money from Coinbase or from Bittrex, from exchanges that have really good reputation. Um, that's good if you know your counterparty. So who's that person who want to buy your car for Bitcoin? So whenever he's trying to launder money with your car purchase, or he's a miner, that's really good to ask those kind of questions.
So that would be your recommendation. If someone wants to pay a significant amount in Bitcoin, for example, you would say, so please don't send it from your personal private wallet, but transfer it to a Coinbase wallet, and then transfer it from there to my wallet, because this gives me a higher kind of credibility of this being clean Bitcoins, right?
Yep. I mean, Coinbase is not a special recommendation here, but any publicly known entity with at least good KYC ML procedures on their website, proper contracts and documents, and AML checks will be okay. So that's the thing. If you're receiving money from a private wallet, I would definitely give you the link to our bot, so anyone can check their counterparties. So there's still some room for consideration, especially if people are trying to launder money. The bot may not show you the best result as a visual investigation, for example. But in most cases, it can tell you whenever money are good. So if bot tells you, I know really 10% of the money, where are they coming from, that might be suspicious. But if it says, okay, 100% coming from Bittrex or Binance and Coinbase and Poloniex together, that's okay. So you can receive money from a personal wallet. That's okay. And what's more important, and that's a good example at the right side. So what do if you get hacked? So first of all, what you need to do is contact the cyber police. Um, it's really important because all the further actions are easier to do with the police. Let's say, if you want to block money at some kind of entity, or if you want to get your money back from Odyssey Trader, with police, it's easier. It's easier to start a conversation. It's easier to, to end this with the proper result that you want. Watch your coins moving, so you can watch them in blockchains, and as soon as they reach a wallet with large amount of transactions. So that might be a hot wallet. A hot wallet means a really active wallet of some kind of an entity. So you can even Google this wallet. So definitely, I can advertise myself and say, contact us, and we are ready to help. But there are some things that can be done just by you, and maybe if that's time sensitive, you can also do that with your hands, and just a minute after the hack happened, so maybe you can catch them during the next block. You can easily even Google hot wallets. Sometimes you can find some kind of information or what kind of entity it is. um, Contact entities, and yeah, as I told, with the police will be way easier. You should be ready to prove your ownership for the wallet that get hacked, and yeah, you should collect evidence inside the blockchain. That's a really good example of KuCoin hack at the right side. So they actually send this kind of message to lots of entities and investigation agencies like that. So they actually, as soon as they understand they got hacked, they send all the wallets in different blockchains to investigators, journalists. And if you Google Twitter, you will see lots of people were actually thrilled, doing visualizations, tracing those coins, discussing them, writing articles about that, and so on, so on. So that's a good way, especially if you have a large hack. Yeah, definitely your users will know about that. That's that might be bad impact on your business, but with that thing, you have more possibilities, more opportunities to get your money back quickly. Yeah. So basically, in terms of conclusions, that's something that we talked with you at the start. So what I want to say is that Bitcoin is not an instrument for fraudsters anymore. It's not really good idea anymore to buy drugs in dark web with Bitcoin after tumbling them, because even if you're sending money from legitimate exchange to tumblers or mixing, or so they also sometimes tracing outcomes as well, just to characterize your as a client. So even if you send in from legitimate entity to some kind of foggy area, you may get your account blocked as well, or you will get questions from your financial regulator, or suspicious activity report from your exchange to your regulator. So that's a really bad idea to use Bitcoin for that. In fact, Bitcoin is even better than cash in terms of its transparency and traceability. With more legitimate entities, regulations, Bitcoin may not really follow its original mission to remove middlemen, fight banks, be a tool to counter financial crises and all this loud stuff. But instead, it can make financial system, like current financial system, more transparent, more secure. And I think that's the future of Bitcoin, because it's super cool in terms of its security. As I told you this example when I actually tried to understand the security issues, and if Bitcoin is hackable, and yeah, and the transparency, which is I've been talking about that all day today.
Yeah, cool. Thank you very, very much. That's really enlightening and quite interesting. There's one question I would have posed, but it came from a participant asking, so do you think we will go full circle from the Bitcoin origins? Because instead of the anonymity of Bitcoin with the traceability on the blockchain and with the emergence of euro, dollar, and China currency coming up. Is there a scenario that if everything goes into the digital currencies, institutions will be able to trace essentially all payments to every company and all persons? And is that a situation that we want to have around there?
So basically, there are people in the community that consider my work as evil, So because I'm kind of, countering this anonymity things with my researches and investigations. But in terms of, if we ask ourselves, do we want, corrupt governments, or we want to trace and understand corruption, its patterns, and then solve it maybe that way? Or do we want people buying drugs, kids buying drugs in dark web, or we want to shut down all the darknet marketplace and maybe legalize some kind of drugs and legally, sell them? So that two different words, and now they kind of exist as two different words. So there are dirty Bitcoins. They're not really fungible, interchangeable with clean Bitcoins, because if you sell Bitcoin from Silk Road to any entity right now, there is no chance you can sell it. Or maybe some entity would receive this, and then they may lose that during the next transaction, right? So there will not be, so there is kind of economy where people are going dark or gray zone, and these Bitcoins are not fungible, and this word becomes smaller and smaller. That's the trend, because, for example, in 2014, it was really big buzz about Bitcoin, is for drugs and dark web, because actually 30% of all transactions was related to dark web. Now it's less than 5. It can be like 1% of all transactions during 1 month. So and this trend is cool, because we're getting more clean Bitcoin, we're getting institutional adoption, we're getting we get in governments allowing us to mine, trade, exchange, and we shouldn't be hiding anymore. It's great. It's generally a cool thing. So I think there should still be this kind of cash alternatives, where with cash you can kind of keep your privacy for certain situations. Yeah, but it is always, a trade-off between the privacy and security, for example.
Got it. You mentioned that you're working with law enforcement on different projects. Can you share a little bit what's your experience? Who is the kind of most professional, and how does the different kind of law enforcement and police entities, how educated are they?
Yeah, so basically that depends not even on country, but it can depend even on particular police department, maybe even. But in most countries there are departments like cyber police that have been doing internet investigations before, at least. So this may be related to dark web, or maybe some kind of maybe human trafficking. For some countries that's really the case. So these departments are really educated because they've seen cryptocurrency for a long time. They may not understand the technology, how we clustering things, how we tagging things, and things like that. But usually when you come into these kind of authorities and you explain what you're doing, they say, oh, okay, I have a couple wallets for you to check just right now. So they already have a material to work. Yeah, and as most of countries, they have these kind of cybersecurity departments, or they form it during the last maybe 6 or 7 years. Even in small countries like, let's say, Georgia, not the Georgia state in the US, but Georgia at near the Turkey.
Yeah.
So even they have the kind of police department, that understand all the cybersecurity things, and they're kind of educated in this thing. So lots, when you go in um, kind of to special departments like special security services and stuff like that. They are definitely more, professional educated because they have dedicated people that are learning, that are visiting conferences. There are actually conferences when law enforcement, especially in Europe, there is a conference in it was the last time it was in Switzerland probably. Yeah, when special security services they learn from even people like me, and sharing knowledge to each other as well, having speeches and educating in terms of blockchain.
Cool. Yes. Are there any other questions from the audience? Please feel free to post your questions in the F&A section. And maybe if you have, we are already approaching the end of our time frame. However, if you just want to briefly demonstrate how this Telegram bot works, or show once, because people ask, how could I verify and how can I myself check on the blockchain my transactions or the source of funds I get. I think that would be interesting for all of us if that is possible.
Yeah, let me stop the demonstration because that's for PDF. Let me run the bot and think how I can hide all my conversations in Telegram. Just a second. Yeah. So. So that would be okay, I believe. Yep. So let me share my screen again. Yep. So can you see my screen right now with the bot? Yeah. So let me remove this thing that you said was gray. Yep. So you can see there is a Bitcoin ML bot GL. So yeah, it's super easy. You can, I can click test report right now. So it just uses random transaction ID and giving you the sources. Okay, so you say, okay, bitcoin24.com was a risky source. So it's all sources would be like a suspended exchange, some kind of OTC provider, and 1% he don't know what kind of wallet it is. So it was the reports I've been trying here. So we found BTCE, for example, but also, Binance, for example, and Bittrex, that can be easily combinable for some kind of transactions or wallets. There was also, wallets that find Coinjoint and Wasabi wallet, for example, which was not really good. Binance, Coinbase, Bitstamp. So you can know, the types of entities you're dealing with. What kind of types of entity were the source. Yep, and basically what kind of risks you might have with that particular wallet. Yep,
Okay,
so
that's really impressive. Yeah.
Yeah, so it's super quick. You just check transaction ID, send in transaction hash, and you get in sources. Yep.
And this is operated and developed by your company. And
yeah. So we did it as a tool for our Odyssey friends, as I told you. So they usually need to check sources of funds because they then sending money to exchanges, and they do want to get blocked because there was cases, and this is kind of accelerated, like in 2018, 19, when first FATF guidelines were launched. Probably updated from 2015 and became more strict. So exchanges started actually blocking and filling up suspicious activity reports on Odyssey providers. And they might get blocked like $1-2 million at exchange. They cannot do business. So they started treating this thing very seriously. That's why we're kind of sharing our information, our researches with them through that bot.
Pretty cool. There's one final question that came in the chat. So is it good to say keep your KYC coins and your non-KYC coins in separate wallets to avoid that the non-KYC coins kind of spread dirt on the other ones? Would that be a kind of the strategy?
I have another question. So why do you need to keep non-KYC coins? You know, yeah, I mean, so if you do have dirty coins and you accidentally, let's say, purchase that, right? So I'm not willing to suggest someone for people who obtain coins in not really transparent way. So if you accidentally purchased coins, so you can still prove you paid money for them, and at some cases that would work well for you. And in most of the cases, I know that would work. That worked well for the person that said, "Okay, I'm an OTC provider, for example. I purchased those coins with my bank transfer. You know, I'm paid. I paid all the taxes. I did everything right. I just didn't know, you know, this thing." So, with maybe more strict regulations right now, these OTC providers are not using these methods anymore. But if you did some kind of peer-to-peer transfer and stuff like that, the more transparent coins do you have, it's better. Yeah, and still there is a way to define the owner of multiple wallets, and that's something you should consider if you're trying to hide, you know, and trying to use, you know, different devices, maybe some kind of Tor account for other coins. Still, exchange may understand, okay, you're always using a VPN. I actually got blocked for using VPN from BitMEX. Really, that was the case. So I've been using this default Opera VPN at BitMEX, and I got blocked. So I was need to prove you know, my sources of funds for BitMEX. So
Right.
they can block you anyway if you trying to look suspicious. Even, you know, if you're trying to do this kind of non-KYC deposits and, you know, doing that from different accounts, maybe, you know, with different Tor nodes or VPNs or stuff like that.
And
So
if you get blocked, I never got blocked, so I don't know. But if you get blocked, then it's after the transaction. So the transaction is happening, and then you get blocked, and you don't get it back, and you don't get the
yeah. You cannot get it back until you prove anything. And then exchange may have different options. They may even send your money to their regulator. Depends on, you know, what kind of license they have, and depends on what kind of jurisdictions you are. They may keep your coins, just keep them because they are locked and they are not spending them. They're not using them. You're not performing any deals. You're not allowed to trade or withdraw them.
Yeah.
Or in some cases, that's pretty rare right now, but in some cases before they've been sending money back. So yeah, but in this case, the exchange will get questions from regulator, because regulator are using tools also to monitor blockchain transactions and monitor entities inside blockchain. That's something we also worked with when I'm talking with working with law enforcement. That's also something that we know. And they also monitor blockchain transactions, and they may see, okay, so this entity is under our license, and we see that they received 5% of coins this month or this quarter from Coinjoint transactions. So, and they didn't fill out any suspicious activity reports for them. Some of them will get withdrew, you know, so they get out of the exchange.
Yeah.
So we definitely need to ask questions about that. So for the regulator, it's binary. There is no any kind of threshold. Let's say, you know, if it's 1%, no, we will not be asking questions for them. So when I've been talking to regulators, so usually, you know, I've been asking this kind of question: what kind of risky coins is a threshold for you to start asking? But I said it's binary. If there are risky coins, we will be asking questions. Yeah. So that's. If you want to keep your privacy, you have your coins, you have your proof of funds. For example, you can go Monero. You know, there are entities even that you can use that will accept Monero, that will exchange that to cash, but you have to provide that kind of source of funds. It can be a receipt that you bought that Monero at some legitimate entity, and that will be okay.
So I personally think this is really playing out the advantages of Bitcoin. If we use the traceability, the trackability, and the transparency as an advantage of Bitcoin, which makes it superior to cash for people that are open to share the source of funds. However, the question being how transparent I as a person will ultimately
wanna be actually.
Sure. Yeah. But we are close to reaching 8:30, and this is the kind of ultimate end time for everybody. For us, for me, it was quite interesting. I do hope that the participants learned something new, but I'm quite confident because this is a very special and unique area. And I think if someone has issues, problems, questions, everybody's welcome to get in touch with you. And for now, I have to say thank you very much. And usually, if we were at a physical event, we would have a huge applause. So, Alex, thanks for being with us. Thanks for sharing your insight and your ideas. And everybody who attended, thank you for being with us. And yeah, and all the best for COVID in the Ukraine, of course.
Thank you for your invitation, and I would love to visit your offline events, definitely.
Perfect. Okay, Alex, thank you.
Thank you very much.
Everybody.
Thank you very much to the audience as well.
Bye.
Bye-bye.